Apple's shocking 11.1% sales decline. What's next for tech? In the fast-paced world of business, few things can rattle the foundations of an industry quite like a major company's disappointing sales report. Take Apple, for instance. In its latest Q1 report, the tech giant revealed that its iPhone sales fell short of expectations, sparking widespread concern among investors and tech enthusiasts alike. This situation raises a critical question. How can businesses navigate the turbulent waters of market fluctuations and consumer behavior? The answer lies in a keen understanding of current events and their implications, which can be the difference between thriving and merely surviving in today's competitive landscape. Apple's Q1 report is a striking reminder of how quickly fortunes can change in the tech industry. While the company reported an overall revenue increase of 4%, the decline in iPhone sales has sent shockwaves through the market. This disconnect between revenue growth and disappointing product sales illustrates a prevalent pain point for many businesses: the challenge of aligning product offerings with consumer demand. The implications of this disconnect are significant, as they not only affect investor confidence, but also impact long-term growth strategies. Businesses must be agile and responsive to the ever-shifting dynamics of consumer preferences, market competition, and economic conditions. Want reliable financial growth strategies? Subscribe and enable all notifications by clicking the bell button. The challenges faced by businesses today are multifaceted. For Apple, the decline in iPhone sales can be attributed to several factors, including increased competition and changing consumer behavior. With the rise of alternative smartphone brands offering similar features at more competitive prices, Apple finds itself in a battle for market share. Additionally, economic conditions, such as inflation and shifts in consumer spending habits, play a crucial role in shaping demand for high-end products. As consumers become more discerning, businesses must adapt their strategies to meet evolving expectations. So, what can businesses learn from Apple's experience? First and foremost, it is essential to stay attuned to current events and market trends. This means not only monitoring sales figures, but also understanding the broader economic landscape and consumer sentiment. Companies should invest in market research to gain insights into shifting consumer preferences and potential areas for growth. For instance, if a particular demographic shows a growing interest in sustainable products, businesses can pivot their offerings to align with these values, creating a competitive edge. Moreover, businesses must embrace innovation and adaptability. Apple's situation underscores the importance of continuously evolving product lines to meet consumer needs. This could involve exploring new technologies, enhancing existing products, or even diversifying into new markets. Companies should foster a culture of innovation where employees are encouraged to think creatively and propose solutions that address current challenges. By prioritizing innovation, businesses can position themselves to respond effectively to market changes and seize new opportunities. Want reliable financial growth strategies? Subscribe and enable all notifications by clicking the bell button. Another critical aspect of navigating today's business environment is effective communication. Transparency with stakeholders, including investors, employees, and customers, can build trust and foster loyalty. In the wake of disappointing sales figures, Apple's management took steps to reassure investors by providing a forecast for the upcoming quarter that suggested potential revenue growth. This proactive approach can help mitigate concerns and maintain confidence in the company's long-term vision. Additionally, businesses should consider the implications of global market dynamics. Apple's decline in sales in China, a significant market for the company, highlights the need for businesses to understand regional differences and adapt their strategies accordingly. Factors such as local competition, regulatory environments, and cultural preferences can all influence consumer behavior. By tailoring their approaches to specific markets, businesses can enhance their chances of success and mitigate risks associated with global fluctuations. As we delve deeper into the implications of Apple's Q1 report, it becomes evident that the tech giant is not alone in facing these challenges. Many businesses across various sectors are grappling with similar issues. The key takeaway is that understanding current events and their implications is crucial for sustainable growth. Companies that take the time to analyze market trends, consumer behavior, and competitive dynamics will be better equipped to navigate uncertainties and capitalize on emerging opportunities. In this context, the most critical insight from Apple's report is the need for a strategic reevaluation. Analysts and investors are closely watching how the company will respond to this sales miss. Will Apple double down on its existing product lines, or will it explore new avenues for growth? The answer to this question could shape the company's trajectory in the coming months and years. For businesses looking to emulate Apple's success, this moment serves as a reminder of the importance of strategic foresight and adaptability. Ultimately, the landscape of business growth is fraught with challenges, but it is also ripe with opportunities for those willing to adapt and innovate. Apple's experience serves as a case study for businesses across industries, highlighting the need for a proactive approach to understanding current events and their implications. By staying informed, embracing change, and communicating effectively with stakeholders, companies can navigate the complexities of today's market and position themselves for long-term success. As we reflect on the lessons from Apple's Q1 report, it's clear that the path to business growth is not a straight line. It requires a willingness to learn from setbacks, a commitment to innovation, and a deep understanding of the factors that drive consumer behavior. In a world where change is the only constant, businesses must remain vigilant and adaptable, ready to pivot in response to new challenges and opportunities. The ability to anticipate and respond to market dynamics will ultimately determine which companies thrive and which ones falter in this ever-evolving landscape. So, what are your thoughts on Apple's performance? Are you optimistic about the company's future, or do you see potential pitfalls ahead? Share your insights in the comments below, and let's continue the conversation about the trends shaping the tech industry and beyond. Want reliable financial growth strategies? Subscribe and enable all notifications by clicking the bell button.